Hello and welcome to the Investing Master Series. My name is James Boyd. Alongside me, my good Canadian friend Barbara Armstrong with us. We welcome her. We got David here, Lola, High Speed Low Drag, Paul, Spanish, Fayez, Will, Silas, and many others. Good morning to you. Today we're going to talk about what happens when the short-term trend line breaks down. And what are some things the investor might consider when playing defense on some positions? Now, I'm not saying all, but there's definitely been some stocks that have broken down to start the week. Now, that doesn't mean everything's falling down, but sometimes we can be in a situation where things break down. What might the investor consider in terms of management? We'll talk about that here today. Now, today's date, September 2nd. I cannot believe we're in September 2nd. Hopefully your team, hopefully your team won over the weekend and you are 1-0. Now, just real quick, as a quick reminder, you could go on X. You could follow Barbara, myself, all of us coaches on X. We do post educational updates there and announcements. Quick reminder, if you're joining us and you say, I've never been to this class before, where can I actually see other content? I'll show you that in just a moment. But you can follow us right on YouTube. And we're on the channel called Trader Talks with Schwab Coaching. So check that out. I'll show that in just a moment. Now, just real quick as we get started, remember, when we talk about stocks, which we will, and then we're going to talk about options. Okay. Remember, options carry high level risk and are not suitable for all investors. Also, the information here is provided for general informational purposes only. Some of the examples we talk about, you might not be interested in. That's okay. Not everything interests myself either. Schwab does not recommend the use of technical analysis as a sole means of research. Other different types of analysis can be complementary to technical analysis and kind of be interwoven into technical analysis. I think there's many other things that are interesting, like fundamentals, intermarket, just kind of macro, etc. Very interesting. Technical analysis is a start, but it's not the dead end or the ending. Also, remember, when we talk about examples, we will be doing those on the Paper Money software application. We'll do that for educational purposes. Investing involves risk, including loss of principal. Past performance is no guarantee of future results. Now, as we get started, also remember that short options, if someone does a covered call, okay, or someone sells a put or a cash secured put, those could be assigned at any time up to the expiration, regardless of the in-the-money amount. The options we talk about are American options, American style options, and that can happen. So have an understanding of what that means. Is that good or bad? And we'll talk about that today. Now, what I want to do is I want to kind of talk about some of the market conditions we see. We'll talk about indexes, sectors, maybe low commodities. Then what I want to do is I want to talk about some current positions, some practicing of putting on a cover call when the stock is breaking down, practicing of putting on a collar when the stock is breaking down. Why might the investor do that? We're also going to be talking about maybe exiting some stock positions. We're going to practice together in the Paper Money accounts, selling, okay? And what are those sell signals? Can we practice that in a Paper Money account and kind of show why, okay? And it's one thing to kind of go back and historically say there was a sell signal, but a lot of times it's doing it in the moment. That's something different, okay? And then what we're going to do is we're going to talk about some new examples here today. Now, what I want to do is want to show you, if you go to this page, okay, if you go to YouTube, let me actually take that. Let me slide that down. There it is. Let me put this in the chat. So if you went to youtube.com, you search Trader Talk Schwab Coaching Webcast, it's going to get you this page. Right in the middle, when that pulls up, you're going to see if you have subscribed or not. Subscribing is free, okay? So all you got to do is just subscribe, and that way, anything that you're subscribed to, you like, think of it, subscribe as like you follow, you're going to have subscriptions. Subscription doesn't necessarily mean you pay. In this case, you could subscribe for free. And so just make sure you get that, because on this page, you're going to see that you can also get kind of which videos playing now or classes going now. But the other thing is there's shorts. There's also playlist. And for this class, you're going to see that, let me send you this just to make sure we have this. This playlist right here is for this class. So if you said, hey, where can I actually go and get an example of previous sessions that you've done this class so I can get an idea of what's going on? Well, here it is, okay? So you could go back and say, what did we talk about last week? What is option leverage? Brent talked about, do leaps belong in your portfolio, sector rotation into which areas, and so on. You can get an idea of what we cover. And also you can kind of get a sense of how I teach, okay? So just want to make sure you're aware of that. Now let's go to the market just real quick and let's pull this up. So first thing, I like to look at the list first, okay? Now the list could be on the left-hand side. I like to look at the list on the market watch. Why? Because I can actually see more column headings. And when we look at this, we like to kind of rank this by the percentage change. And if you're looking at this on a percentage change and you see the VIX at the top, what do you think is going to be happening? Well, it wouldn't take very long to figure it out. The VIX, boo, is to the upside. That probably means indexes like S&P, NASDAQ, RUT, Dow, they're pushed down. When you look at the VIX, what you're going to notice is trend 3. Prices above both moving averages, the 10-day exponential, 30-day simple. That's not good. You get the volatility, the VIX index going to the upside. It's pressuring. If you look at trend 1 on the S&P, trend 1 in the NASDAQ, trend 4 on the Russell, trend 5 really on the Dow. So why would someone be talking about covered calls? Why would someone be talking about collars? Why would someone be talking about exits? Well, we know that when the VIX goes to the upside, it's going to put pressure on bullish positions. Okay? Now, the areas that have been leading had really been the Russell and the Dow, and those are still holding up a little bit better, okay? But the ones that have actually kind of pushed down the most in trend 1 below both moving averages, okay, you're going to see it's the NASDAQ and the S&P. Now, we also kind of include here in this list, if you take a look at the SOX is also actually one. We also see that if we go down to the US dollar index, which has been pressed down, it's in 2, kind of in no man's land. But the one that's kind of standing out the most is gold. Now, if I included and said, is that shiny stuff, is it just gold by itself, or is high-ho silver, okay, also in there as well? Now, what can happen is people kind of get rid of some equities and they maybe go to some other areas in which they can invest in. Equities or stocks are not the only game or investment in town. We need to understand that. We think it's just stocks. It's not just about stocks. There's other things. And so when equities or indexes go down, you could actually get kind of some other areas, US dollar, commodities, things like that are actually pushing to the upside as well. So let's take a look at what these really look like. VIX first off. Now, last Thursday, I had to leave town, okay? And the last time I left town, the tariffs, the start of the tariffs happened back in what, late March, early April or so. What you're now going to notice is I left town on Thursday, and all of a sudden, volatility goes to the upside. Now, I'm not saying because I left town, the volatility went up. It's a joke, okay? But it's the second time it's happened. Now, what you're now going to notice is then on Friday, we push up again, and then today we just gap up, okay, 16. Again, when the VIX is going to the upside, you have like a mentality, a mind frame. If the VIX is going to the upside, many individual stock positions, even if you had ETFs, example given, they're most likely getting pressed down. We can see that if we go to the market watch just real quick, go to that third list, we'll go to sectors. And if we look at that list, I want to kind of take a quick look at what is the trend. That's number one. And the second thing I really want to do is I want to look at the 10HC, the whole. Because if we see that on that whole column, if that is really going red, then highly likely you're getting the start of potential sell signals. Does that make sense? Now you might say, oh, I'm not sure. Well, what is the 10HC? The whole counter, right? So first off, the color is kind of parallel to what we're seeing on the chart. So if I pulled up IXT, the technology sector, and we see it's a red background, okay? That means on the chart, confirm, the moving average is red. The number in the box represents the number of days where the moving average has been red, okay? So on this, what it tells us, if we said, are there any sectors, without even looking at the charts, that are even going, are even in the green? Well, answer, we see energy and we also see gold. Now, I include gold, okay, in the sectors. I say that gold has kind of been trading like a kind of a non-growth sector, if you will, okay? Those are the only two areas. So when we see that, now, by the way, if the 10 period moving average is showing that, and the 20 period moving average is showing that it's red as well, well, you're kind of really getting to the point of that 1, 2, 3 methodology. The 10 period moving average is red, 1. The 20 period moving average is red, 2. And you're also starting to get those crosses. Now, of course, I mean, the higher that the VIX goes, the greater the chances, the higher the percentage of stocks or sectors or indexes that are going to be hitting that. So it's not a surprise. Okay, you see this 100 times, you're like, this is probably what's going to happen. Okay, now when we pull up these charts just real quick, so there's the VIX, it's up 18. Okay, was down to around 14, gets a little push. When we go back to these charts, is the trend over? That's a question for you. Is the trend over? Well, when you go back to this chart just real quick and you look at the Dow, and one of the things that's kind of like, it's kind of like a little Debbie Downer, if you will, in the shorter term. Sometimes when we get this where the price is holding a diagonal line, it's just so nice, okay? And then all of a sudden the price breaks the diagonal line. If the price is above the diagonal line, you have bullish momentum. Price goes down below the line, boo, bearish momentum. Just because we break that short-term diagonal line does not mean the trend is over from an intermediate to longer-term perspective, okay? But short-term, it flips from bullish to bearish. Now, this does not mean that the investor is going to sell everything and say, short-term breakdown, sell everything. If you did that, then every time it rained at your house, you just put your house up for sale. I mean, think about that, how ludicrous that sounds, okay? And that's why a lot of investors, just because it breaks down short term, doesn't mean they sell everything. They just know that, hey, the price is broken down short term. It could try to retreat down to maybe some old levels of support. Now, nobody likes to give back anything, okay? Nobody. So what that means is, hey, I was doing well until Friday, and then all of a sudden I've started to give back some of the money. My account's gone down from the recent high. Higher highs and higher lows. When you make a higher low, that means it's retreated back from the high, okay? So we like higher highs, but those higher lows means it's pulled back from the high, which means the portfolio is actually giving back some from the high, okay? We like when the higher low is over and the price is starting to bounce. Now, what I want to kind of do is I want to kind of show you this. When you look at the Dow, it just broke down short term. You look at the RUT, it's going to look like the same, okay? You look at the RUT, there it is. So when the price breaks the diagonal line, you really are watching where are the horizontal levels of support. And you can look at the S&P the same, look at the Dow, the NASDAQ as far as the same, okay? If we break the diagonal support, draw the horizontal levels of support and say, where is it likely to bounce? Now, the one thing we got to say when we go back and look at the VIX, we have not really had a whole lot of time recently where the VIX has gotten very high. 21, 22, okay, 25, and you actually had 20, 26-ish again. My point in saying this is there can be times where the VIX pops, okay? If the investor were to sell everything when the VIX was, let's say, above 18, you're probably just selling out closer to the lows. So it might not make a whole lot of sense to say, man, I'm going to sell the higher that the VIX is, okay? And we could kind of have a history lesson on that. But if you look at this and say, could the VIX go up higher? Sure, okay? But if you would have sold here, there, and there, congratulations. We sold out at the bottom in the market. So why do I tell you that? We kind of need to go from a fearful mentality to like opportunity, okay? When that VIX spikes, there could be some opportunity to actually place some bullish trades on some stocks that are down near identifiable support levels. Now, directionally, okay, bullish perhaps, but we could also go back to the V word, volatility, okay? Some investors like that volatility spike to place bullish trades when the volatility is higher. Now, let's kind of talk about just real quick, what are some stocks, and I want to kind of bring some examples up just real quick in the paper money account. And if we look at the paper money account and we pull this up, I just want to kind of show us some positions from last time, okay? Now, we did in the ALK, we are on this simulated trading paper money account, the IRA. And what you're now going to notice is this was the trade from last week, okay? The ALK. So when we look at a list of positions here, what are we looking at first? I'll tell you what we're going to look at first. What we're going to do is we're going to look at the column. And it's always when I'm teaching that it does this. But we're going to look at the column of trend 3. We're going to look at the column and assess which ones are in. Nike got stopped out. Which ones are in, which stocks actually have trend 4 or 5. Remember, if they are in trend 4 or they are in trend 5, what that really means is they're at an area of resistance and or trend 5, they're starting to fall back. Now, if you said, James, I can't see that really that well, let's go back to this chart for just a moment and try to get some help, okay? Now, I'm going to pull up an example. So Nike, okay? Nike just stopped out. Why? If you said, James, I'm not very good at reading the trend, okay? Well, this is trying to help you, okay? If we actually see the color of the candle mimics and is defining what type of trend we're in. If we are in a purple color candle, it means that the price has fallen down below the 10-period moving average, but it's still, which is the blue line, but it's still above the red line, which is a simple 30-period moving average, as we can see at the top. Now, if it's red, you could almost kind of see what's going on. You could kind of, why is the color of the candle changing? If it's red, that means we're just now below both moving averages, okay? So feel free to use this. Now, I'll share with you this chart right here, and that way you can kind of see what type of trends that we actually have. Now, I want to kind of pull this up. Now, this is just showing this chart. I want to kind of take a look at some positions just real quick. Let's just start at the top. So when we look at AM, if we have trend 3, this is probably where the investor says, geez, I wish I had more trend 3s. We know how you feel, okay? When you look at this, now we have a little situation going on here. What is the situation? Well, what we see in this case is we have a target. Can anyone tell me how to manage the position? Anyone? Okay. Now, what do you notice on the chart? What we notice on the chart is we have 46 shares. We have a target at 150. If we go down and look at where that stop is, it's at 132. Now, if we looked at what was the reward to risk ratio of this, if I kept my stop where it is, we have like a $13 down move in the stock, about $13. The stock would have to go down to stop out. And we have like a $3 move to go to the upside. This is if we kept the stops where they are. Now, if we said $3 potential reward to go to the target, $13 to actually go to the stop to the downside, that's like a fraction of what? 1 to 4 or worse. You get what I'm saying? Now, as soon as we see that, and by the way, you could run the numbers just like we did, but you could also say, dadgummit, James, it seems like we're really close to the target. And if we're really close to the target, this is where the investor might do, like say, move the stops up more aggressively, okay? Now, some of us kind of like to use maybe a little Excel to do this. But if we said, James, hey, now remember, do we take it from the current price or do we take it from the highest intraday price? Does anybody remember the answer to that question? Well, I wonder if I didn't see it at 147.27. I just see it now. Do we set the stop where we see it now or from the intraday high? Well, the answer is the first. We take it from the intraday high, even though we didn't see it. So if our target is 147.20, target is what? 150, excuse me. And we went to 147.27, that's $2.73. Well, if I take 147.27, the intraday high, we needed another 273 to go to the target. That means the stop is going to be moved up to 144.53. Because once we start going within 1 to 2% of the target, which could be resistance, we're clamping down the stops. A stop does not guarantee profit because we don't know where it's going to get filled at. So first thing that we need to do on this is 144.54, move it up. Do not click on the X, so cancel the order. Just click on where it says minus 46 STP for the stop. 144.54. 144.54, give me as close as I can. 144.54, about right there. I'm 2 pennies off. Could we just edit that order and move it up 2 pennies? Sure, right there. Confirm send the order. So that's the first thing we need to do. Okay, now by the way, if today it goes up another dollar by the end of the day, could we move the stop up on a stock positions again? Yes. Okay. So we're using the intraday high. What was the reward remaining? And then actually clamping down the stops. What we don't want to actually have happen is that it falls all the way back to the 10-period moving average, and then we give a lot of those gains back. And that's what happens, right? You have loose stop losses and you give it back. Now, so we talk about AEM. On the ALK, anything to actually bring up there just briefly? Well, when you look at the ALK just real quick, do you see anything on this chart that kind of shows that the trend is breaking down? Any comments here? And do you see anything that's showing the trend is breaking down? Now remember, the position on this is a long call, which is the right to buy the shares with the strike price. If you have a long call, bullish position. What we really want to see is we make higher highs and higher lows. Just 2 days ago, we made the higher high. And really, when you go back and look at this, we're still above the 10-period moving average. Don't have anything to say on this ALK, okay? Still trending, wanting that 60.28 to hold. We go back to the long call. Now, by the way, the question I always had is if I buy a long call or the investor buys a long call and that long call has an expiry of 19th of September with 17 days left, can the investor sell the call prior to the expiration? Sure. Okay. Just have to check liquidity. Okay. If we said, look, I'll take the 30%, I'll take the $115 on an investment that was $395, right click on it, create closing order. We're not going to sell it, but I just want to kind of show you this. So if the investor said, look, I want to try to sell this for $510, can I get a fill? I don't know. We're going to have to double check. We go back to what's the volume in the open interest like today. And if we look at the 57.5 call, 5 total contracts have been traded in the world. Okay. So if that our position fills in the paid money account, it's like 20% of all the volume today. Not a lot of volume. Now, is that bad? The stock is down and there's not a lot of volume. That might be good. Okay. There's still a decent amount of open interest. The bid-ask spread is 20 cents or narrower. So that kind of might be a positive. There's actually not a lot of volume, okay? Not a lot of people selling and selling and selling, okay? Now, so I don't have anything to say on ALK. Now, Delta, I want to talk about Delta for just a second. Now, Delta, notice here we have 100 shares and 100 shares. When you hear 100 shares and prices are falling down a little bit, what maybe does the investor start to think here? Well, now a lot of people say to me like, hey, James, when might the investor consider selling covered calls or putting on collars? The answer to that question is when the color of the candles turn orange or the color of the candle turns purple, okay? Now, obviously, orange just means you're at an area of resistance, trend 4. If you actually get purple, like we actually see today, well, what that really means is we're slipping into trend 5. Trend 5 is when the price is currently trading or closed at below the 10-period moving average. But notice it's still above the 30, just losing momentum. Now, here's the deal. We know that if the investor has 100 shares of stock, 100 shares, it's the most sensitive to price direction. If it goes down $1, you're down 100. Goes down $2, you're down 200. Go down $3, you're down 300. Goes down $4, you're down 400. Goes down $5, you're down $500. But the investor can change the position. It can change what the delta is by overlaying options on top of the stock position. Now, what I want to do just real quick, we know that if the investor did a covered call, it caps the upside and it makes the delta a little bit less for the position. It turns the position from a stock position to a covered call. If the investor actually says, for example, I have the stock, I'm going to sell the call and buy the put, well, that's a more defensive position because you also have a right to sell the shares to the downside. Now, sometimes when the investor sees this, they might say, you know what, James? So first off, takeaway. If you feel like your timing of selling covered calls is horrific, okay, I would tell you to go look at the VIX. Whenever the VIX breaks out to the upside, just simply has a moving average crossover to the upside. That 1 point alone, and then second point is go look at your stock and say, is it starting to break down? Those 2 points is probably going to help your timing by a lot, okay? Does the VIX start to show a crossover to the upside, which it did? And is the stock that we're looking at and currently having the portfolio affected by that? And if it was affected, we start to see orange or purple color candles as signs of kind of consolidation. If it's a purple color candle, signs of price, starting to break down, deterioration. Now, what I'm going to do is, this is why the investor wants to make sure if they, for example, sell. Now, by the way, I have what type of position we have here. This right here is a cash secured put. You could also think of this as a wide put spread. So we have the 100 shares here, but this is also a main key point is if the investor buys shares of stock, they might want to know ahead of time if they needed to sell a covered call or considered it or wanted or considered to do a call or etc. Does it have options? Well, now, by the way, the liquidity today is not going to be the same liquidity in, let's say, 30 days from now. We don't know what the liquidity is going to be in the future, okay? But does it have current liquidity? Could it have potential future liquidity? Potential, we have to verify in the future. Now, what I'm going to do is this only has 17 days left. So we're going to go down to this, let's say something that has 17 October with 45 days left. And what we're going to do is we're going to sell a covered call. Now, if we wanted to be more protective, the investor might sell the 60s. If you sell the 60s, you're really selling at the money or slightly in the money by 16 cents. If you sell, let's say, the 45 delta or the 62.5 strike, you're selling slightly out of the money, meaning the strike price is higher than the stock price. If you do that, the premium is not as big, okay, but it's still a 45 delta, which means there's a 45% chance the stock could be above that strike by a penny. It also is telling us that the stock goes up or down $1. The option movement, price-wise, moves by about 44 cents. Stock moves up or down $1. Convert that to the option. That's what delta is. And the options move by about 44 cents for the first dollar move. Now, what you're now going to notice is, how do you sell a call, though? Well, first thing that we need to do is cancel that stop right there. We have the target on that. I'm going to cancel that. We cannot sell a covered call if we have pending targets and stops, okay? So I cancel that. Number two is if we said, look, I'm kind of going to be a little conservative here, and I'm going to sell the 62.5 strike. How do you do it? We're going to click on the 291. If you click on the 291, now don't rush and do this, okay? Look at down below. Where are we at now? What's the mid price? Many investors try to get the mid price. It doesn't mean that it can fill there, but we're going to try to get a fill. So we're saying, look, we will agree, the investor will agree to sell these shares from now until expiration, okay, at 62.5. Now, could someone buy these shares from the paid money portfolio today? Yes. That means the investor gets from 60.99 up to 62.5. Okay, well, that's nice. It's a gain. They get to also keep the 295, even though it's not an expiration. I know what you're thinking. How can I volunteer to put myself in the front of the line? If you figure that out, you let me know. I've never seen a way. It's random, okay? But it would be nice. I admit, many investors are like, many investors would be like, hey, just put me in the front of the line, buddy. Now, here's what we're going to do. The price moved a little bit, $3, confirm send. So this is kind of a classic example when prices start to deteriorate a little bit, okay? Some investors say, I'm going to start to use these covered calls and collars. Now, I want to go back to if the investor said, well, James, I feel like I'm horrible on entries of covered calls and collars, etc., and I'm horrible without also identifying spots to take them off. Well, it's just the flip of what we said, right? If these candles turn back green, we're starting to see the shift back to the upside. There's only two criteria or kind of filters we talk about. We talk about waiting the 9 or 10 days after you put the covered call on, okay, to consider taking that call off, or inside 9 or 10 days. So if, let's say, tomorrow it broke out to the upside, this paper money account would not buy the call back. It would only sell a put, if it could, on top of the position. We went over that, okay? So what about 2 days? What about 3 days? Well, remember, we read that rule set example given last Wednesday, last Tuesday. And so if it breaks to the upside, it's still a bullish position, okay? Now, I want to kind of go fast fire through. So this is a classic example of just not selling the position, but just changing the exposure. When I say changing the exposure, I'm talking about changing the delta on the position. How does the delta get lower? Because you sold the call. How does the delta get lower? Because you sell the call and you buy the put. The investor still has the shares, but they're just trying to use different ways to bring the exposure down. Daniel actually says, where can I get all the trend number references and colors? Well, so first off, if I went up to the very, one way we could get it. So if I went to the very top, go to Market Watch, and what I'm going to do is I'm just going to go this is probably, for me, I think the easiest way. If you actually had this, which I'll share this script with you just real quick because I'm answering Daniel's question. I'm just going to go to where it says edit formula for just a second. So if you said, I have no earthly idea what the numbers even mean and why is it relevant? Well, this was actually created by me. The script was created by a client. And if you ask 10 people what the trend is, a lot of times you get about 6 different answers. I got sick of that. Okay. I have 4 children. I have patience to a point. And it's hard because without having kind of a categorization of trend that's definitive, that's based upon like structure, you can smear technical analysis based upon how you feel. And that's what I felt like is a lot of people would answer questions. This is other investors that I know as well. I'd say, well, wait, you said when the stock was like this, it was bullish, but now you're saying it's bearish? And so it was inconsistent as far as really categorizing trend or classifying it. So we just use a 1 through 5 categorization or classification, okay? 1 through 5 is not patented. It's in the English language. I even had someone ask me about that. Hey, you can't say 1 through 5. We speak English, okay? The big actually thing is you could see number 1 right there, 1. Scroll down again, you can see 2, okay, right there. And it will give you what does it mean, okay? And then read that. And you go down to number 3, and you go down to number 4, okay? And if you have not read that, then you kind of probably feel a little lost a little bit, okay? It gives a little, just a paragraph description, and then really what it's saying is the 5, when we say 5, what does that mean? Close is less than the 10-day EMA. We said that. And close is greater than the 30-day SMA. So when we say close, we're talking about the stock price. So if you said, hey, can I grab that? Okay. Yeah, right there. I'd feel really bad if you didn't have that because now you're trading without any structure of what the trend is. The trend can influence what type of strategies you pick. The trend can influence also what type of adjusting of the position, just like we did from a stock to a covered call. Now, what I want to do just real quick is I want to kind of go look at some examples of some stocks that are kind of showing maybe a little signs of life. Now, just because we kind of talked about some stocks that are getting pushed down, it doesn't mean everything's pushed down. And if we talked about, let's say, some stocks, now we know that, for example, that crude oil or the energy sector is getting a little push. Stocks like, for example, Chevron, they don't show signs of deterioration. We still got those green lines for the moving averages and the shading. So it hasn't kind of been bearish for Chevron. You go look at AM, excuse me, not yet. You go look at ExxonMobil, you don't see any negative deterioration in that, okay? Now, we know that, for example, like on the AM, which the paid money portfolio has, you look at the NEM, we talked about that, fine. And what you're now going to notice is, if we look at that, now remember, if we said, what is the portfolio trying to get in? I just want to be 100% clear. The portfolio is trying to get in positions 1, 2, 3, okay? The portfolio, the paid money portfolio, is trying to buy positions either here, here, here. The difference in 1 to 3 is how quickly do you want to get in? 1 is more aggressive, 2 is a little bit more confirmation, 3 is a little bit more confirmation. The paid money portfolio is trying to be in positions where the moving averages are green. And if the moving averages are green, the 10-period moving average is above the 20, there's a green shading. This is what the portfolio is trying to be in. Now, sometimes they pull back, they don't behave. And that's why you get things like exiting in the short-term stock, cover calls, collars. But the paid money portfolio is looking for these setups over and over and over and over. So if 5 or 10 years down the road, you said, I saw James Boyd 5 or 10 years down the road. Now, that'd be a good thing, because that means I'm still above support myself. But the big thing actually is here is it doesn't change, okay? Now, I want to go back to a stock position. Let's go back to just real quick. I want to go back to the position that I want to pull up just real quick is I want to bring up WPM for just a second. How many of you got that joke that I'm still above support? Now, here's the deal, okay? If we look at WPM, this is actually one that when we go back and look at the trend, okay, so if I label, there's 1, here's moving average crossover 2, there's actually 3, okay? So if we go back and really take a look at this, we really see that the trend is up. Now, wheat and precious metals, how is this different? Well, when we actually go back and look at the fundamentals of this, we actually see that it sells precious metals in North America all over the place. Now, the difference can be that it does gold, silver, palladium, platinum, and cobalt deposits. Okay, so not all mines kind of maybe do everything, but this kind of does a little bit more like the palladium, the platinum. Now, if we pull this up for just a second, let's say the investor says, look, I want to be bullish, okay? Now, Bill says, buy which candle color? Well, so if we kind of go back to this just real quick, if we went back to, let's say, number 1, the color of the candle, if we said, what color of the candle was it when the 10-period moving average went green? It was a green color candle. If we went back to, let's say, number 2, when did it cross? On that day, it was a green color candle. When did actually the 20-period moving average cross? It was on a red color candle, but it was a red color candle that was above the moving averages. And that's why we kind of said 2 weeks ago, if you get a red color candle above the moving averages, this doesn't mean a sell signal. It can even just mean a pause, okay? But really what you're going to see probably more than not is when you get potential entry setups like a call hold, what color candles are those? And the answer is they're green, okay? All right, now what I want to do is I want WPM. I want to go back to this, WPM. Now, we got about 5 minutes, and we're going to do this a little quick. Now, the position we actually had from before was we had the 19 September 95 put, and we had the 85 downside protection. That position right there is up about 74%, down at the bottom right, $185. Now, if we actually exit this position and enter a new position, that we just call that rolling. Now, if we just get out of the position we have now, and then re-enter a new one, we're kind of manually rolling the position. Create closing order, we're going to buy it back. When was that position entered? It was entered in on the 5th. So about a month ago, that stock, now if we want to pull this up and say, show me that on the chart, where was it entered? That position was entered on the 5th. So if we kind of looked at that and said, well, what step were we on? 1, 2, or 3? We were on 3. What color candle was it? It was a green color candle. Okay, just to answer that question. Now, what I'm going to do is I'm going to try to get this filled. Confirm send. Notice the commission on top. Send the order. Okay, now we're not going to September's anymore. We're going to go down to the Octobers. Now, if the investor said, James, I'm a little bullish on this, I think this price is going to break out even further, what we could actually do is we could actually try to sell the 100. Now, that's very close to the current price. That fills. We're going to right click on the 100, sell, and we're going to go right to where it says vertical. We're going to sell the 100, buy the 95 as downside protection. Okay? This is a short put vertical. It's a credit. Okay? Now, what we're going to do is if we sell one of those, what's the risk? Given a vertical, it's 315. Well, if we could take a little bit more risk or we're willing to, let's say we do 2 contracts. Max loss, 626. We're going to do 2 contracts in the IRA. Now, what I'm going to do is I'm going to send that order right there. That's been adjusted because there's 2 contracts. Send it. Okay. Now, here's what we're going to do. If we do that, that position previously came off. Okay, there and there. We're trying to get filled here. The October, the 195. Okay. Now, I also want to kind of show a couple other stocks that are getting a little bit of a push here today. One of the stocks that are getting a little bit of a push is Boeing. Now, Boeing, for example, it's not a breakout day yet, but it's one that's kind of holding in there. Okay. That's one we're going to kind of keep an eye on as well. We're going to kind of hold that thought. When we look at Apple, Apple's down here today. What color is the candle? Red. Are we in kind of a bullish condition? The answer is no. Okay. 20-period moving average still red and the price below it. Not a bullish setup, at least not yet. We're going to kind of keep an eye on that though. Now, if we go back to, let's say, T-Mobile, that's one that was kind of getting a little bit of a push here today. If we go back and really take a look at this. Now, James L. asked the question about back testing. Could you back test, for example, whenever the stock turned green on the moving average, the 10 period, buy it. Whenever the 10 period moving average went red, sell it. This is just me. I kind of prefer to manually test that. Okay. There's ways you could kind of test it in the back testing. There's also kind of, you say, look, this is the entry I want. Could I back test it? The thing is, back testing is back testing. Okay. Now, I grew up in an era where there was no back testing. So we forward tested it. Okay. And so, you know, you could back test. It's just going to show historically. Some people, they like to say, look, I'm going to test it in the future, even trading with a small amount of shares. Now, what I'm going to do is on this is I'm going to right click on this position and I'm ticker. I'm going to go with stop for the moment. Okay. Now, if we take this plateau, this 250-ish level, if we said are we in 1, 2, or 3? Well, we're only in number 1 because the moving average is green. The 20 is not green. There's not been a crossover. So if we said, is this more of an aggressive or more of a confirmation entry? It's aggressive. Okay. Now, what does that mean? You could be wrong. What's the advantage of buying on number 1? You're closer to support. There's trade-offs. Okay. Now, that's why we always say the confirmation is not free. Now, what I'm going to do is I'm going to set the stop, last trade here, underneath 245.13. Okay. 245.13. If we said, hey, we're going to take, let's say, that capital that we normally talk about $6,500, it's going to be about 25 shares of stock. And we'll put that here. Now, we're not buying fractional shares, so it's going to be 25 shares of stock, and I go dated GTC. Now, if we backed up and said, well, is there a potential target on this? Where might it try to go to? The answer we would give is probably right around 270-ish, 272 and change, okay? Now, I'm out of my time here today. I want you to practice covered calls. There could be an opportunity to actually practice those as the volatility goes up. I also want you to keep an eye on some stocks that are kind of showing some behavior where they're able to kind of hold up underneath the pressure of the VIX rising. This is what we call outliers. Not everything tends to be sold. There's some stocks where they're purchased or even held, even when the volatility goes to the upside. I think it's important to kind of have a rule set as far as trading, right? And also recognizing that not everything is bearish in the shorter term. Now, I'm out of my time here today. I want to thank you so much for your comments and your participation. Remember, with what we discussed here today, it was done. Let me just pull this up. Yeah, slideshow. There we go. Yeah, remember with what we discussed, it was done for example and illustrative purposes only. Stay tuned for Cameron May coming up next. And I want to say thanks to Barbara Armstrong for answering those questions in chat, and thanks to all of you. This has been the class on the Investing Master Series, focusing on shorter term pullbacks and some outlier setups. Thank you so much. Take care. Bye-bye.